Hey guys, it's Tony here. So, look at this. The Bitcoin price has been actually falling down ever since the Fed actually had that meeting. Now, they talked about three main things, which in turn caused this market to go down in the short term. I'm going to talk about what did the Fed do, what did they talk about, why is this important, and what will they do next. I want to talk about all that and more in this video, so let's get into it. Watch till the end, leave a like down below, this is crypto for you. So, number one, I just want to say that they are not in charge of keeping your wallet bullish. The Fed has nothing to do with that. But as you guys can see, ever since that meeting that we had, because the Fed had a meeting recently, we fell down. The stock market has been falling down. On the 4-hour candle, you can see this red candle right over here sticking out as a sore thumb. Now, there are three things that they actually talked about, which in turn made the whole entire market collapse. And there's a reason why the market fell right now in the short term. Number one, it actually fell because of the Fed taper. And before last month, the Fed has been purchasing $120 billion of treasuries and mortgage-backed securities. It was supposed to be temporary, and because of that, the whole entire market went down, fearing that they will lower the purchases faster than how much they said. But with the conference, they actually said that they will reduce the plan by $30 million each month until March, so that they wouldn't need to buy anything else. And they are basically saying that by reducing the amount slowly, they'll be able to make the market function by itself, not needing for them to step in and buy all those mortgage-backed securities. But that is just the beginning. Why the market dumped was actually more of these reasons. The second reason was because of the interest rate hike that they talked about. Because for the last 18 months, interest rates were practically zero. But we know that they can't stay zero forever. Because if they stay, soon the inflation will get out of control, borrowing will become maximized, and won't become profitable. So rising the interest rates are in fact needed. But the market didn't know when this would happen and how high the interest rates would be raised, so people of course thought the worst and the markets took a little swim down. But now, with the announcements, the Fed actually said that they won't be raising rates more than expected. They are going to go with caution and they will keep them low until they are sure that they will be able to raise it without causing us to go into a recession. But when somebody asked the question to Jerome Powell about raising the interest rates more than expected, he said that it was not out of the question, meaning it could in fact happen, making the market red right now. But the biggest reason why we fell today is the third reason. The third reason is because inflation. You guys know that inflation is very high right now because there's a shortage of goods and there's lots of shortages in staff, meaning that these items are getting scarce. And since that is happening, there's very, very high inflation right now. Now, the Fed actually says that they will be working on the inflation throughout the next year, and that seems like a good thing. But when asked a question by somebody where they stand, they said that since the December meeting, the inflation has went the same but a little bit worse, meaning that there's a stronger chance that they can raise the interest rates than you think. So what is going on right now is that the market began to sell off in fear that since our economy is strong, unemployment is low, and since inflation is high, the Fed will have more room to actually raise the interest rates faster, even though they mentioned that they will take their time. Since Jerome Powell mentioned that ever since the December meeting the inflation was slightly worse, the Fed will have to raise interest rates faster, even though they say they will take their time. And since he mentioned that ever since the December meeting the inflation was slightly worse, that signals that Jerome Powell will most likely raise the interest rates back to the Fed will probably raise interest rates, bringing the inflation down and the prices of goods down with it, which will actually make the market sell off. And since there's no data when they will be raising interest rates, investors think the worst, and that's why the market began to sell. But we should remember that the Fed does not care if the stock market rises or falls because they're supposed to help the inflation and labor market. So right now, the S&P 500, it took a dip. It is in fact going down a little tiny bit because of the investors thinking that right now they will be raising interest rates faster. We can still appreciate the time and actually buy back in at lower prices because the stock market might in fact fall. And remember that the Fed does not care about your wallet, but it does care about the labor market and the inflation, which is what they are trying to solve right now. So that is what the Fed did right now. That is what the Fed will be in fact doing, and that is why the market fell down. So that being said, I hope you guys enjoyed this video. If you did, leave a like down below, subscribe if you haven't already, don't forget to click that post notification bell. I'll see you guys next video. Stay warm, stay safe. Bye!